The second thing we want to look at here after the budget planning is the ratio analysis, ratio and discriminant analysis. Yeah, so the ratio and discriminant analysis is also stored in an Excel file, which we are going to open now. Let's see. I want to open it so that we see what is inside. Okay, let's go to through the file explorer. So ratio. Yeah, that's the file explorer. That's it here. So we'll double click to open it. And this ratio also is in this ratio also is in 97 2003 Excel file format. Now let us see what we have here now. Yeah, so here we have 5 companies. We simply identify that company 1, 2, 3, 4, and 5. And then here you have their turnover. Here you have their gross profit. Here you have their cost of sales. Here you have the profit before tax, profit after tax, total equity, total debt, current assets, current liabilities, total assets, equity market value, that is the market value of the shares at the market. Then equity par value, that is this is the book value of the equity. This is the market value, this is the book value. They are all needed in this. The number of shares, that is in issue is there. And then the total inventory, that is, we all know what inventory is. And then total receivable, that is debtors, in other words. And then you have total payable. Now we have to also still go further to see what is there. And then preference dividends, and then interest expense, retained earnings, and then EBIT, that is earning before interest and tax. Now with this in mind, we can now do our ratio analysis. We have already seen what the number of companies that are there. So let's go there now. Yeah, so we so okay, I don't know. This has hidden itself or what? Okay, let's call it back. Okay. Okay, I think this is becoming not responsive, so we simply close it and open it again. Close the program. and then we will start it. Yeah, starting the program. Okay, that's the opening screen. Yeah, so we are now the control model. So we go back to our analysis place, business tools, then VB GUI. Then we go to ratio, and then we click OK. Yeah, so the ratio also will bring out a form similar to that of the budget planning. Like I said earlier, we also have to enter the initial information analysis. You can call it ratio, maybe ratio 1, and then the number of companies involved is 5 companies. Those are the ones that we have on the Excel sheet. So we cannot do more than what we have. So we can do less. Then the number of parameters, I think the number of parameters, let's see what number of parameters we are talking about. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. The number of parameters is 20. We'll enter the 20 there. Then we now import data, and then the name of the data we are going to use, the data file is stored as a ratio, so we simply type in ratio, press OK, and then we wait. Good. You can see it has filled everywhere with the data that we are looking for. Look at it. The company, that's company 1, 2, 3, 4, 5. That's it. So now, having seen this, the next thing for us to do is just to click process. Yeah, what this means is that you can also enter, apart from calling it up or importing it from Excel file, you can also enter these things manually if you have the data and the data is not in Excel form. So now let's now click process and see what happened. Yeah, so you have finished processing. Now let us see what it has processed. Now these are the data used, the same data that we saw before. And the Excel sheet. These are the data used on the Excel sheet. I'm trying to see that we look at it to the end so that we can yeah. Okay, all right. Okay, so now let's watch. Can see. Yeah. Yeah, so that's it. The same way it appeared in the Excel sheet, so how it appeared here. Now, these are the These are exactly what we are looking for. That is the ratio analysis. The ratio analysis. Yeah, we call it firms ratios. Firms ratios. Now, the firm name, you have firm 1, 2, 3, 4, 5. There are 5 firms. Then the rows, that return on capital employed for each of them, as computed by the computer, is here. Then return on assets is there also. Then return on equity is there. The net profit margin is also there. Debt equity ratio is there. Then earnings per share is there. Then current ratio is there. And then Z-score, Atman's Z-score is there. Then interest cover is also there. Then RSR, that relative solvency ratio, that's any relative solvency ratio, is also there. Then operational break-even point is there, and that's also any operational break-even point. And then the cash cycle is also there. You can see this is a very comprehensive ratio analysis that gives you a lot to do. You can see from what you can see, the cash cycle, the one that has the highest, the longest cash cycle is the last one, that is company 5 for firm 5. And the one that has the shortest one is company 4, that's for firm 4, 27.22 days, which means that, it must be the credit management is excellent for that company. So that is about ratio analysis, and I think it's a good one.